I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
GEM International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of 65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. Welcome back to the show, Gary.
Thanks, Jim. Thanks for having me on.
An interesting few days after that vote in Britain to split from Europe.
Very interesting. Most of the polls and the bookies, they all had it the other way. I thought it was going to go the other way, and I thought even if they were to vote to leave, that they would rig the vote so that the powers that be would get what they wanted. But kind of a surprise, and it's having the effect that would be expected on the market. We're getting a sell-off, but like I said. I'm not really changing my expectations. I think all it's done is delay the move to new highs. The intermediate cycle low is occurring now instead of, I was expecting probably this sell-off in August or September if the vote had been to stay. And I think we've got a strong rally, probably at least a marginal breakout to new highs, and then the decline into the intermediate cycle low. So it's just, delayed things a little bit, but I don't think the end result's going to be any different. I still think over the next 2 or 3 years we're going to break out above those May highs of last year, and this is a pretty large consolidation, a little over a year now. So when we do break out, I think we're going to go a long way.
Both the Canadian and U.S. equity markets were up today after some violent downwards motion right after the vote. Does this mean stability?
Well, what I would expect to normally happen would be some kind of a bounce here, and then naturally what should happen is we should go down and break the low from yesterday, make some kind of an undercut low, and then get our bottom. But we've kind of had managed markets now since 2008, and we saw this in February. A daily cycle was cut short at 18 days, and they normally run 35 to 40 days. But you'll get interventions from time to time, and they'll come in and they'll stop these sell-offs before they really get a lot of downward momentum. Because that basically that's the only way you can protect the economy from going into recession is you have to keep the stock market propped up. So they discovered that in 2011 that they could intervene in these markets and prop the markets back up and you keep the economy at least muddling along. So that may be what we're getting today. I don't know. If allowed to trade naturally, we should get a bounce and then one more lower low, an undercut low. But I'll have to see how this plays out over the next several days and try and determine whether or not we're getting an intervention today that's going to stop the sell-off right here, or whether we will get a natural undercut low, maybe around the employment report or something.
China officially announced it's not going to allow the markets to be eaten alive by Brexit. So you're absolutely right. Manipulation either is happening or is around the corner.
Yeah, that's just the fact of life in these modern markets. They are managed by central banks and by governments, and unfortunately, what they end up doing is they end up creating bubbles. And then when the bubbles pop, then there's really nothing you can do. We saw that when real estate bubble burst. So I expect we're going to have something similar will happen, as they'll keep intervening and keeping the markets propped up, and they'll make the mistake 180 degrees in the other direction, and they'll allow another bubble, or I imagine it'll probably be a series of bubbles, and then and we'll get another crash. But I think it will come after we get another series of bubbles, not right here.
I wonder if the British government plans to punish the people for voting to leave Europe, because the finance minister is warning we're going to have government cuts and higher taxes. I thought the European Union was costing Britain a lot of money.
Yeah, I'm wondering if the referendum isn't legally binding. Parliament still has to implement it. So I'm kind of wondering if they don't kind of hem and haw for months, and then eventually they just don't don't put it into effect. So I don't know. We'll have to see how it plays out. This is not something that just is going to unfold over a week. This is going to take months to maybe even a couple of years to play out.
Well, under the rules, Britain has 2 years to negotiate their way out, and you could see with negotiate being the big word that perhaps, okay, we'll change 2 words here. We've officially exited Brexit, but leave everything exactly the same.
Exactly. They only exit in word only. They don't actually do anything. So we'll see if that's what happens.
If you were in London, would you have said it's a good idea to get out of the European Union, or should you stay in?
Oh, I think they were probably better off in. Just my opinion. I haven't followed it that close, but I think they were probably better off in.
Well, I mean, age it seems to be the big cutoff point. If you're 50 or older, you voted to leave Europe, and if you were younger than that, you're probably looking at your future and where you're making most of your money, and most of Britain's trade is in Europe. So why not be part of that association?
Yeah. Typically, it kind of falls along the lines of, the people that aren't really well off. They want to leave, and people that are little, kind of like, more like Republicans and Democrats. The Republicans tend to be more the upper middle class and high end, and the Democrats are more lower middle class and lower income. So if people are not satisfied with their life the way it is, and they tend to want change. So I suspect that's probably how the voting kind of went, was people that really weren't satisfied.
And I've also seen interviews with people saying, well, we didn't think the no thing would happen, so we voted to exit. But today, now that it's actually happened, that was kind of a silly thing to do. They were saying one of the most Googled things in England was, what does Brexit mean? After they voted for it. Shouldn't they have done that the day before?
I suspect a lot of people don't actually know what the consequences are going to be, and they just listen to the propaganda from the media.
We'll have more with Gary Savage right after the break.
Gem International is a new diamond explorer in the richest diamond-producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109-carat diamond, recently discovered in Africa by a fellow Canadian junior. It is expected to sell in excess of $65 million US at Sotheby's, London, June 29th, with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Gary Savage. Gary, gold, of course, skyrocketed right after the news of the British vote. Today, it's fallen a little bit. Does that mean the panic run to gold is over?
Well, I think that the panic was just a temporary driver of gold. The real driver of gold is that I think the dollar topped this year. So I think that's the real driver. So once we kind of get through the aftershock of the Brexit, then I expect the dollar probably only has a few more days to rally, maybe into the employment report, and then I think the dollar's going to roll over and head down again for several more months. So gold is due to take a breather. It's rallied for whatever, 19, 20 days now. So it's due for a little correction. So I would expect some kind of pullback here pretty soon. But I think, in my opinion, it's going to be a buying opportunity because I don't think this intermediate cycle has topped yet, and I don't really expect it to top until maybe into late August or even early September before the larger intermediate cycle tops. So there are going to be pullbacks along the way. Markets don't go straight up; there'll be corrective moves, but I think the larger trend is going to remain up for at least a couple more months, maybe even 3 more months.
As we're talking, copper had a 5-cent bounce up to $2.17. Why has copper gained so much?
Well, I think the entire commodity complex bottomed in February. Actually, I think all assets finished multi-year cycle lows. Gold was a little ahead of everything else. It bottomed first part of December. Stocks, oil, the CRB, the commodity complex all bottomed in February. And I think we are in this first intermediate wave up that is in the stock market anyway, and probably in the CRB is having its first intermediate degree correction. But I think that correction will hold well above the February lows, and then we'll get another leg up like what is happening with gold. We had the first leg up that took us to a little over 1,300, and we had the correction back down to, I think it was 1,201, something like that. And now we've started the second leg up. So gold is just running a little ahead of the rest of the markets, the commodity markets and the stock market. It's like one intermediate cycle ahead of everything else. But I think once we put in a bottom here, then stocks and the CRB will soon follow gold up into a second intermediate cycle.
Oil plunged quite a bit after the British vote, and I wondered out loud, what, they expect people to stop driving because of a vote in Britain?
Yeah, it's just panic selling. I've noted before this happens when stocks move down into an intermediate cycle low. The selling pressure becomes pretty intense, and that's what we saw over Friday and Monday. And it tends to, it creates margin calls, and it tends to infect most everything else. And that didn't infect gold, but if that's what's happening, and it sure looks like it is, that stocks are moving down into an intermediate cycle low, then you can expect that selling pressure to infect everything else. And that's what looks like has happened with oil. So I would expect oil is probably going to bottom about the same time that the stock market does.
Latest report says the U.S. GDP rose 1.1% in the first quarter instead of a 0.8 estimate. Is the U.S. economy doing better than some people expected?
Well, I can speak for what I see in Las Vegas, and we're not going gangbusters like we were in the middle of the housing bubble, but when I go down to the casinos, they're full, the restaurants are full, so we're muddling along. So I would say, based on what I see in Vegas, that's probably about right. We're probably growing at about a 1 to 1.5% rate, I would guess.
So people are still going, and I've found the activity in Vegas is a pretty interesting barometer of North American economic health. Obviously, people feel...
Yeah, that's been my theory also. People have enough money that they're willing to go gamble it on a blackjack table in Vegas, then the country's probably doing okay.
Or maybe people just feel, I need a vacation. Why not Vegas, where perhaps the vacation can pay for itself if I'm lucky?
Yeah, it rarely ever works out that way, but I guess some people may think of it like that.
Also, what about the economic activity from the giant Tesla battery factory?
I think you asked me about that last time, and I just haven't really followed that. in Vegas. I don't really get out that way. I don't even go to the casinos all that often. Too crowded down there on the Strip. So I'm really not the person to ask about that one, I don't think.
Overall, are people still optimistic about the economy, or are they holding their breath waiting to see which way the federal election goes in November?
Well, in Vegas here, I think they're fairly optimistic. I see, help wanted signs in a lot of the businesses, and I'm not seeing, really anything going bankrupt or closing the doors here. So, at least in Las Vegas, it looks like people are fairly optimistic.
And how did the comeback in real estate go after the big crash in 2008?
Well, we haven't come back, all the way to where we were at the top, but we've come back a long, long ways. So I think at the bottom, the median house price was about 125, and I think it's probably back up to about 200 now. So we've popped back considerably, and we were one of the hardest hit.
Gary, anything else that's really caught your eye that people should be watching right now as we head into the so-called summer doldrums?
I think you want to watch the euro. When the euro puts in a bottom, and it's due any day now, when the euro puts in the bottom, that'll be the top for the dollar, and that will be when all the markets will turn and head back up. So that's going to be my tell. I'm watching the euro right now. So when the Brexit finally fades and people start moving on to the next catastrophe or whatever, the next thing to worry about, then I think the euro is going to bottom and the dollar will top. And as the dollar moves down into, it has a 7-year cycle low a 3-year cycle low that's coming due in the middle of 2017. I think we've already started to move down towards that bottom, but it has a long way to go yet. So I'm just watching the euro. When it bottoms, then I think everything else will bottom also, and then we're going higher. If the U.S. dollar's at a high, is there another currency that you would recommend if it starts to drop? Well, I'm not really much of a currency guy. In my opinion, the best currency is gold. So, if you don't like the dollar, you don't like the euro, rather than buy yen or Swiss francs, I would prefer to buy gold or silver. Silver's probably even better. Yeah, I noticed as gold corrected and went down today, silver was still on its way up. Yeah, silver has been pretty strong, and I expect that the first intermediate cycle out of that December bottom, the big winner was the mining stocks. They had gotten beaten up the worst. They're still stretched pretty far above the 200-day moving average, so I'm not expecting a huge, gigantic move out of the miners during this intermediate cycle. I suspect that this intermediate cycle, the big move is going to come in silver. So, that might be where you want to focus most of your, metal funds. Let's say between now and the end of August or 1st of September, maybe you might want to focus a little more towards silver than towards the miners, because the miners had the big run during that first intermediate cycle. So I think it's time for silver to catch up. Gary, thank you so much for speaking with us. You're welcome, Jim. Thanks for having me on. My guest has been Gary Savage, President and CEO of SmartMoneyTrackerPremium.com. You're listening to HowStreet.com radio. You can find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be emailed to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.